We as SM South Africa, we are excited. I don't know if some of you know, but SM South Africa has been around for the past 10 years, and our mission, has always been to help entrepreneurs to get access, to the relevant information that assist them, in starting, launching, and also growing their businesses. And we've done that, for the past 10 years. It gives me joy today that, we've got our first webinar for 2024. And the topics, they are very popular. If you come to SME South Africa, a lot of people, they know us because of some compliance articles, or some they come to us because of some of the funding articles that we have written, that we continue to write till today. We keep growing. As a platform, we've got over 100,000 readers that comes onto our platform, and over 50,000 SMEs that read our newsletters. And a few years ago, we launched a platform called Startwise. I'm sure some of you know about that platform. And the platform really connects entrepreneurs with experts, whereby they get, assistance when they need to, to get some advice on any issue that they're going through within their business. Okay, cool. But without wasting much of the time, we're going to go straight to our first speaker, who's an expert also on our Startwise expert platform. So our speaker, her name is Kate Combrich, and she's the owner of Combrich Advisory, based in Durban. She's an expert in small business and medium businesses, and she's also an advisor and a coach based in South Africa. She's also a chartered accountant, and she specializes in helping small and medium businesses in adapting, growing, and embracing efficiency through technology. She also has a background in venture capital, corporate finance, financial management and compliance, process refinement, and systems implementation. Kate brings a wealth of experience to her clients. She's also a passionate coach and a mentor, holding credentials from Comensa, which is the Coaches and Mentors of South Africa, and also serving as an ambassador in the South African Institute of Chartered Accountants, which is SACA, the mentorship program since 2020. Kate's mission is to help entrepreneurs, professionals, and technical experts transition into successful business leaders. Very excited to introduce Kate as she comes through to present to us. You can take over, Kate.
Thanks so much, Bailey. You make me sound a lot more impressive than I am, but thank you so much for that introduction. Thanks. Bailey's already introduced me. As he said, I am an SME specialist. I'm a business advisor to many SME clients. And I've also recently become a Comensa credentialed coach, and I also mentor young CAs, as Bailey said. So I'm hoping today that I can share some valuable information with you guys on compliance. I know compliance can be a very dry topic, so I've done my best to make it interesting and informative and really helpful for small business owners. So when we talk about compliance, the kind of compliance we're talking about today is regulatory compliance. So this means conforming to a rule such as a specification, policy, standard, or law. And compliance can be explained by reference to the fact that punishing a behavior will decrease the violations by both the wrongdoer and by others. So all of those complicated words basically mean if you know there is a penalty or a punishment, if you don't comply, you are more likely to comply. So that's kind of the basis of compliance. And then I've said at the bottom here, look out for my top tips during this presentation. You'll see there's a little yellow post-it that says tip on it. And these are just helpful things that I have learned through years of experience working with small businesses that may help you guys someday. Okay. Is there a difference between the compliance for business registered with SIPC? So that's a PTY limited or a closed corporation, and a sole proprietorship. So that's a sole prop where you're just running the business in your own name. And the answer to that is yes. You will see during my presentation, I will have noted whether something applies to a sole proprietorship or a SIPC registered business or both. So look out for those as well. Okay. If you run a business in South Africa, these are your kind of big four compliance bodies, as I call them. There's our friends at SARS, the South African Revenue Service, which is the tax man that we all know and well. And there's the Department of Employment and Labour that governs anything to do with employees and labour issues. There's SMEs, the Companies and Intellectual Property Regulator, which falls under the DTI, the Department of Trade and Industry, and that just regulates companies. So if you're a sole prop, that won't apply to you, any of their regulations. And then there's the BBE Commission, which also falls under the Department of Trade and Industry, and they regulate all of our Black economic empowerment regulations. Okay, so I'm going to start with SME. If you have decided to formalize your business and registered it on SME, you will have incorporated a business, which is just a fancy word for registering it. And you can do this on the SME or BizPortal websites under their e-services. Mention both of those websites because SME is in the process of moving over to BizPortal. And so some of their services are on SME and some of the services are on BizPortal. So if you're ever struggling to find where to add a director or register a new MOR or anything like that, just make sure you look at those two different websites. And then another tip is when you register your business, make sure you keep those CRR documents that they email to you because so many lenders, banks, all sorts require those CRR documents as proof of your company's registration. And then the regulation doesn't end there with SME. If you have a SME registered company, you have to submit annual returns. So every year you have to go onto the SME website and pay a small fee depending on your revenue for that year. Can be anything from 100 Rand up, depending on the size of your business. And then last year, SME introduced beneficial ownership regulations, which basically means that you have to let SME know who are the shareholders of your company, who owns the shares in your company. And if you have any changes to that, you need to go onto the SME website and update that. You see, all of these regulations do not apply to sole props, as I said before. Okay, and then labour compliance. So under the Department of Employment and Labour, there are three main compliance areas. One is COIDA, which is the Compensation for Occupational Injuries and Diseases Act, which is quite a mouthful. Most of us know this as workmen's compensation. If you run a business and you employ more than one employee, you have to submit your annual earnings to COIDA every year, and then you have to pay a fee depending on which industry you're in and how many employees you have. And then they will issue you with a letter of good standing. And again, a workman's compensation letter of good standing is something that is often requested in business, whether it's by corporate customers or government or lenders. So you need to make sure that you have this available. Then there's the Unemployment Insurance Fund, so that's UIF. If you have any employees, they need to be registered with the UIF. And you can do this using uFiling, which is the UIF's online platform. So you can actually do this yourself relatively easily. And then if you're paying PAYE via SARS, you can pay your staff's UIF via SARS. You don't need to use uFiling, which I know a lot of businesses do. And then if you've got a really big business and you employ more than 50 people, you need to submit an annual employment equity report. Okay. Next up is BEE, so Broad-Based Black Economic Empowerment, or BBEE, as some of us call it. And this applies to sole props and to companies. And a BEE certificate, I mean, we've all heard that requirement. It is often required if you are a supplier to corporate or government customers. So just make sure you have one. If you have a business with revenue of less than 10 million Rand, then you are an exempt micro enterprise, which is an EME. And then you can download an affidavit off the DTI's website and get a commissioner to commission it for you, which states how much Black ownership your company has and some other metrics as well. And then you just have that as your BE certificate. If your revenue is between 10 million and 50 million Rand, then you're a QSE, which is a qualifying small enterprise. And then you're starting to move into the space of needing a BE verification agent to come and do a BE audit for you and issue you with a BE certificate. And then obviously, if you're a company bigger than 50 million, then you start to fall into the different sector codes for BEE. And yeah, I recommend if you fall into that category that you get a BEE specialist to help you. Next up is SARS. So I'm just going to do a brief overview of the different tax types without going into too much technical detail. When it comes to SARS, it's best not to do things yourself and to find a good accountant to help you. But I think as a business owner, it's really helpful to know what the tax types are and what might apply to your business. So the big five are income tax, which includes provisional tax. Now, provisional tax just means you're paying income tax in various payments during the year instead of one big payment. Then there's pay as you earn, which is PAYE, which you pay on behalf of your employees. Then there's value-added tax, which is VAT of 15%, and that obviously only applies if you are a VAT vendor. And it's compulsory to be a VAT vendor if you have had sales of more than R1 million in a 12-month period, then you need to register for VAT. You can also register for VAT voluntarily if you make more than 50,000 Rand a year. Then there's customs and excise, which is only applicable if you are importing or exporting goods. So if not, you don't need to worry about that. And then there's dividends withholdings tax, DWT, which is the tax that you pay if you pay dividends to your shareholders within your company. And then I've said beneficial ownership also applies here. This also came in last year. If you are a company or a closed corporation, you will need to disclose on your income tax returns who owns the shares in your company. And so this is just, I bring this up again because it's always really important to think about these things in your business. You know, if you're just running it and you're a sole owner, just make sure that you are aware of that you own 100% of your company so that you can disclose that if you need to. Okay, this is one of my biggest top tips that I've learned through many clients over the years. If you register your business with SME, it does not mean that you are registered with SARS. So what often happens is you go into the SME website, you'll incorporate your company, they'll send you the disclosure sheet, which has your tax number on, and you'll think that you are registered with SARS, but you actually aren't. You have to close that loop with SARS. So you need to do the final step and lodge a registered representative, your banking details, all these sort of details with SARS, so they can create an e-filing profile for you and activate all your tax types, because otherwise it's just you have the number, but you're not actually registered with SARS. So you can do this by making an online telephonic appointment with SARS on the online booking system, which works quite well. You can do that as an individual. You don't need to be a tax practitioner. Or find an accountant to help you, because us accountants have usually done this a couple of times and we know how to do it most effectively. So I hope that's helpful for someone. And here are some other permits or licenses that are required based in the realm of compliance. I obviously haven't covered everything because this really depends on your type of business, where you're operating from, the sector you're in, and things like that. So these are just a few common examples that I've pulled. A business license is required for certain service-related businesses. So this is if you're running a food truck or a health spa or like a bar or something like that, or you're a hawker, you will require a business license from your local authority, which is either the council or the municipality, based on where your business is situated. And then I think most of us know if you're selling alcohol, you require a liquor license, which is issued by each province's individual liquor board. And then any food-related business requires a certificate of acceptability, a COA. So this is also issued by your local authority, and they come and inspect your premises and make sure that you meet food safety standards, and they'll give you that certificate which you display at your business premises. Then there's also the Occupational Health and Safety Act, which governs all your health and safety requirements for any business. This can become quite complicated, so it's best to engage a health and safety professional for your particular business needs and make sure they're registered with the authority and can issue you a certificate of compliance, which is called a COC. So those are just some of the common examples of other compliance areas. As I said, these will depend very much on the services that you are supplying or what type of business you're operating. So SME South Africa's website has some really helpful info on this. They have an article on business licenses, which I've just screenshot there, which goes into a bit more detail, but there's lots of helpful information online if you just want to check for your particular business. Okay. How do I stay compliant? So now you know about all the different rules. How do you stay compliant within them? So for me, this is about record keeping and the importance of that. So I know record keeping, the admin side of a business, if you're an entrepreneur, can be very boring and time consuming and can be perceived to be expensive and just something you get to once you've done the rest of the things your business requires. But I have seen, based on years of experience, if you just set up systems and processes, you'll always be on top of your admin. You just need to develop a discipline of doing it like daily or weekly, so that it doesn't pile up and become this huge admin nightmare that you have to get through. When it comes to record keeping, I work mostly with cloud-based accounting and payroll systems. I find that they work the best. They are available whenever you need them. You can get the apps on your phone. You can use your laptop. If you travel for your business and you're on the road, you're not necessarily always at home, you can have access to your financial information or your payroll information whenever you need it. And you'll see there I've listed a few of the common cloud-based accounting and payroll systems that are used by small businesses in South Africa. So there's Xero, there's QuickBooks, there's Sage. I've listed FNB there as well. So this is a little tip if you didn't know. If you're an FNB customer, their instant accounting and instant payroll software is free up to certain limits. So what that will do is it will link your FNB business account to their free accounting system, and it will just run that feed through for you, and you can just allocate your income and expenses yourself, which I find is very helpful if you're running a very small business and you don't want to invest in a bigger system like Xero or QuickBooks. Are there any benefits to compliance for my business? So this is the big question. I know I have to do it, but why would I want to do it? So I've just listed 4 here. Here's another top tip for you. The most important thing about compliance is that non-compliance will cost you money, and it will cost you a lot more money in the long run than being compliant. So here's a little example that I see often. If you're a VAT vendor and you don't submit your VAT return on time, even if it's late by 1 day, you get an immediate penalty from SARS of 10%, which is a lot, because if you are paying a bi-monthly VAT return of 100,000 Rand, say, that immediate penalty is 10,000 Rand. So then you go from 100,000 to 110,000 just by missing the deadline. So it ensures that you keep your records up to date. So if your records are up to date, submitting your VAT return is quite easy, and you can do it in advance because your records are up to date. If you aren't in touch with the numbers in your business, if you don't know how many sales you're making, in what areas, to which customers, what you're spending all your money on, you don't know if you're profitable or not. And this is very important for basically whether your business is worthwhile running or not. Third is cash flow planning. So this is a top tip that I give to all of my clients, and I try and encourage them to have this discipline, obviously, as much as they can. So if you know you have to pay VAT, for example, every 2 months, build a discipline of putting 15% of each of your invoices aside in a separate bank account and store it there so that that cash is available when you have to pay VAT. And then if your VAT is less than 15%, so that means you've got expenses that are VAT deductible, and so the total VAT you have to pay is less than 15, you have cash saved in this business account for other business expenses or assets that you might want to invest in. This is a very good cash flow discipline, rather than kind of leaving it to the last minute and then having to scratch around for your VAT money. And then the last thing is compliance protects your staff. If you're a business owner, you are responsible for your staff's compliance. So this includes COIDA, which pays out if they're injured on duty and protects you from your staff suing you if they are injured on your business premises or in the course of business. Then there's bargaining councils, which you may be a member of for pension and provident funds for your staff. There's UIF, which pays out if they're unemployed. And of course, pay as you earn, which I've referred to before, which is you withholding tax on your employees' behalf. You really want to make sure that you're not putting your staff in a difficult position where they are not compliant. So thanks everyone for listening. I hope that you found something useful in what I had to say, and I will hand back to Billy now. Thank you.
Thank you so much, Kate. This was very, very informative. Great. Let's proceed to our next speaker. Her name is Precious Mvulani, and she has over 23 years of experience, spanning from government and non-government and private sectors. And she brings extensive expertise as a seasoned finance professional and non-executive board member across multiple entities, holding credentials as a chartered accountant and also a registered auditor. Her proficiency encompasses financial accounting, strategy, management, reporting, audit assurance, internal audit governance, enterprise risk management, performance management, and ethics. Additionally, Precious is also the founder and director of GAD, a management consulting firm. She empowers small businesses to devise processes, systems conducive to achieving their financial objective. Her commitment to entrepreneurship, particularly fostering financial inclusion, has led to the establishment of a real estate division within GAD. She is also recognized as an author, facilitator, and content developer of various finance and business strategy materials, having garnered multiple business awards and accolades for her contributions. Let's welcome Precious. Precious, you can take over.
Thank you so much. I'm just going to zoom and take out the video. Okay, so we're going to just cover 6 points. 5 things to clean up before you get to look for funding, and also cover basics. These are generally just fundamentals that you should actually have an understanding before you start and engaging on identifying the type of funding that you need in terms of the sources. And preparation for funding for all types, and what are the things that you need to consider during the application process, and the top 10 mistakes that entrepreneurs make on funding, and then we'll take it through the questions and answers. So before you begin the funding, there are basically 5 points that you need to just watch out for or clean up on. Make sure that you have an appropriate skill and qualification and experience based on what your core business is about. And if you do not, as a founder, have that expertise, make sure then your mentor or one of your team members has that industry requirement experience as a bare minimum. I understand also, though, as a leader, you are expected to somehow understand the language of business, which in this case is finance. And that is important because they're going to be asking you questions. And most of the time, you as a founder are the one who's presenting the business. Number 2, make sure that your business has access to market. Pay attention to the detail in relation to the distribution channel. Make sure you choose a distribution channel that allows you to have a shorter sales life cycle, but also it has sufficient volumes to make your break-even point. We have noticed, though, in the past 2-3 years that they're no longer really considering letter of intent because people have been forging letters of intent. So just make sure that whoever that you're approaching as a funder, they are accepting the letters of intent. But when you cannot, you must also just demonstrate your sales, the leads that you are actually receiving, but you aren't able to fulfill. Number 3, avoid having too many target customers in your customer profile. Rather choose one target market customer and then cross-sell and upsell instead of trying to choose a bigger broad. Try by all means to go rather very niche, but be very clear on how you will make sure that you increase, you are keeping a customer for a lifetime. Solve one problem, avoid you solving too many problems, because then what happens, you end up losing your story, but also the mark on what is your unique selling proposition. focus on one stream of income. And this is also tying back into solving one problem. So that means you're going to need to relook at that business model, the revenue streams. And if it's a revenue streams that is many of them, make sure those revenue streams are coming from using one resource in terms of one skill. You don't need multi-skill to generate those revenues. So just try to focus on that so that you build a business that is really sustainable, but also it's matching with your expenditures. Last one, pay attention to the positioning, because your positioning basically determines your selling price and the placement of your product or service. Because then if your positioning is well done, it's going to also be easier for you to find the right market. So this number 6 one is really tying back to the access to market. So assuming you've managed to get and panel beated yourself on that, then you're going to need to get to the basic of funding. So when it comes to funding, you really have about 4 types of funding. In a traditional way, it's generally 2, which is going to be a debt and equity. But in South Africa and also in developing countries, and even also some countries like Europe that are developed, they subsidize certain sectors, especially like agriculture. So you will then have a grant funding. And then in South Africa, we're very lucky. We have alternative funding, which also include ESD programs. But I think even in other countries, there is crowdfunding, invoice financing, and also purchase order and contracting. So those are type of other source of fundings that are available to you. I will go a little bit deep on these as we move along. So when it comes to debt funding, you really have to think of it as you are borrowing money from someone and you're gonna need to pay back the capital plus interest. It's really a good and a quick access to capital. However, definitely the only time you should really consider this type is when you have a security or a guarantee, and also your net income, which is your bottom line, is sufficient to cover the interest, and you can be able to pay capital. And that is then going to be linked to number 3, which is your asset must be above your liabilities in terms of solvency. You must also have passed a proof of concept, meaning you are already generating some income, but you are demonstrating that you cannot keep up with the orders. And the last one, you must be at a stage where you now want to scale. You have tested certain things, you're now going to scale. And that is usually within the South African context is roughly between 2 to 3 years. And if you are a slow learner like me, maybe 4 or 5 years, because I think I stayed too long in business school, and what they teach in business school is not the same as running your own business. So anyway, the equity funding really is focusing on you selling a portion of your ownership. I think also as South African entrepreneurs, we have a tendency of owning 100% of nothing. And that is very critical to keep aware that the higher the percentage you own of your business, it means then you're going to have to cop up a lot of shared contribution. But the good benefit about this and the challenges it provides is that you may actually lose ownership, and you may also lose the decision making. But again, what's the point of owning something that is zero? So it's really kind of going to need to balance out based on your need. You can actually get this at the startup. You could be also at the proof of concept or even at the idea stage, but you're gonna need to have a very strong USP and a differentiator so that it's very clear how you intend to own up a certain portion of the market share. And I think you should be open to negotiate, but also be open to say, you know what, when we hit this mark of units, I would like to convert this equity to be a debt later. So put that maybe as part of your agreement with your equity partner. You must also be a person who's willing to work with others. And also, you're going to need to look at who the investors that you're bringing in, what skill sets and participation are they willing to do. Other investors, they will like to be involved. Others, they will not like to be involved. So you really need to be very clear about that on the onset. Pay attention also to the exit strategy as to when it's time to exit, how will it work out, what will be the valuation of the business be done, and on the basis of what. Let that to be discussed up front. Now, there are key points that you need just to be aware when it comes to equity funding. As I said earlier, ownership dilution might actually happen. You also have to align your goals to the investors one. Try to discuss things like for the next 10 years to 20 years, what are your goals? And because you want to build something that is sustainable, you want to build something that over time is going to actually generate a real serious value. It does take time because we are learning each other, we don't know each other, and there's also a lot of legal and financial constraint, a lot of due diligence also within that. Investors' expertise, I've already mentioned that. Exit strategy, already dealt with that. The legal and tax implication is very important. That has to be done at the transaction date when you're actually bringing the shareholder, the new investor in, but it's also going to have an impact at the exit, especially capital gains tax, plus also some transfer tax implication. So that you really need to get a professional guidance on. Be aware also of specific regulation, especially around equity funding and also around competition, because sometimes when there is an acquisition of another business, there is a possibility of anti-competitive arrangements that can actually crop in. Valuation, try to make sure that you do your valuation. You don't just thumb suck and say, okay, you're going to have 45%. 45% of what? What is the value? Make sure that your financial statements are clean and tight. And if there's things that need to be revised and reviewed, make sure that is done at the year end. So transparency also, be open when you're making up the assumptions about stuff, but also be transparent even in your records management. Investor relationship, focus on building the relationship and also set up parameters on how often are you going to be communicating with the investors. Build a long-term relationship, as I had said earlier. Now, grant, which is another item that, okay, I've just realized there's an error there. Okay, so under grant, we really have to focus on understanding that majority of the grants will generally in South Africa come from the government and also provincial. We have seen though that DFIs also will actually distribute some sort of grants like NEF. Just make sure that when you are actually looking at applying for the grant, you tie back your problem solving to your social cause, job creation, poverty alleviation, education, but also include rural areas. That will then help you to get your application to be on top of the deck because you are touching to those pain points of the government. Make sure also that the funder is not necessarily just funding the NPCs, because there are funders that will look at the NPC. So make sure that if you are using a PTY LTD, that they do accept PTY LTD in terms as a social enterprise, if that's what you are also doing. But just make sure, guys, even if you are running a profit-making business, you can bring job creation and poverty alleviation and education, depending on the product or the problem that you are solving. Make sure also in your solution, you are dealing with the root cause. It has a strong M&E to demonstrate the impact and build a storyline and the stats on applying for that grant. The grants in South Africa are available across board, whether it's a profit-making business or a non-profit making business. So other alternatives it's crowdfunding. This one is generally also for ventures and projects where you are getting a lot of money, or you're getting small little money from a lot of people, which then end up being a sizable. You can do it for both social cause and also for a PTY. There's lots of platforms. I think there was an article under SME South Africa that was actually talking about this in detail. Invoicing or seeding or factoring of the debtors. This is very important because you don't need to get your money back from your debtors if they have not paid. If you actually have proper systems and processes in your records management from your terms of conditions, plus you are also making sure that you can use your debtors as a security or actually as outright cession. Merchant cash advances, this also can be based on agreed future credit or even sales. Purchase orders, I think this is a big one, which when you get a contract or a purchase order, please just, you can then get a funding for that, but just make sure that your contract, your costing, and the bottom line of that project or that PO, you are making at least 25% net profit. Okay, now let's get to the planning of the funding. So the money that you actually is a debt is the borrowed money, and then the equity you are selling the ownership, and then the source of capital really can also be generated internally by from your profits, but also you can raise funding from the credit, which is in this case the suppliers. Now, preparing for funding. Preparing for funding it's a process. You gotta first need to identify what is the investment. What exactly are you gonna be using the money for? And you gotta need to understand whether it's gonna be a short term or a long term. And in general, a short term is regarded as something that can be even from 3 months up to 12 to 24 months. And then post that, then everything else is considered a long term. In accounting terms, a short term is less than 12 months, but in the funding space, they do consider up to 18 months as being within the short term or medium term. And then step number 2 is to identify, based on the investment, what type of source of funding will this investment require? You will need to understand that the source of funding has to match the period of the investment also. So if the investment you're looking for is long-term, then you are more likely to actually be looking for funding that is a long-term. And if it's a short-term, then, and generally the short-term will actually be things like a revolving loan, credit card, it will be even a bank loan that is short-term. But when then you're talking about long-term, that will then now look at the instruments that are actually going to take longer, which can also include a bank loan, a bond, and asset financing, and so on. Now, the next step is to say who actually provide that type of funding and what are their requirements and what are the things that they're excluding and what are the amounts. Is that amount sufficient for me to actually be able to acquire this thing that I'm actually buying with this money? Now, generally, you also have to prepare for once you've done that, you'll do the list of funders and the checklist for each requirement. And then we will share, I think I will share the link for you guys for that little bit of a template to assist you. But just make sure in terms of clients, you have recent management accounts, you have financial statements, you have a business plan with a 5-year projections, at least also when it's less than that, make sure it's within the loan period that you're asking for. And obviously the stuff that Kate mentioned, industry compliance and tax clearance and COIDA. So the key tips there, though, is that just make sure that your business is not making losses. Because if it is, it's rather better for you to apply for a purchase order or contract financing, or go for an equity but not debt. Also, the letters of intent, I've said this earlier, that is not necessarily considered a contract. Rather, also try to see if you can get verifiable leads based on your conversion rate. And then, as I said, who provide that type of loan is very important, because not everyone will actually be providing the same type of loan based on the risk and the industry. So check if the fund actually even generally give, because there are certain industries that are actually excluded. Okay. The other part that we need to work on is really about making sure that you prepare for the process. The 7 C's of credit assessment that they look at. They look at you as an owner or a jockey of this horse, and then they look at the horse. So make sure that you understand that credit is actually trust. Therefore, you must have a capacity and a capability to be able to deal with the debt, but you must have demonstrated that before. Collateral, control, condition, capital, and character. Character that relates to you as an individual in relation to the credit report that you actually are supposed to have when you're starting this process. Now, there are a few things that you're gonna need to understand and know that are generally problematic, especially for Black entrepreneurs. One, you could be blacklisted. You make sure you have a settlement agreement. If you don't know whether you are blacklisted or not, do a credit report. It is free once a year, and then start making settlement agreement. Try to even pay 100 Rand towards a 3,000 Rand is better than nothing, because they're just gonna say, even if it's a small amount. Make sure that you add the value of your business on your personal assets based on your percentage ownership. If you find that in your personal assets and liabilities, you actually have less assets than your liabilities, i.e. you are actually insolvent, because they're also not going to give you the money if you are. Review your accounting policies. Try to see if you can't carry your assets at the market value than at the historical cost. Review your useful life. Number 4, remove shareholders or directors that are blacklisted on your bank account signatories, because that is considered as an office of trust. If they are blacklisted and they are also signatories of the, there's a risk there. Capitalize on your intellectual property, like your systems that you're building, the customers, do a value of some sort, get a mentor. I mean, Velu was mentioning, we have SmartWise. There's so many mentors out there and they are good prices. So maybe get someone to assist you on that. Make sure though also your MOI and the shareholders agreement does not have conflicting clauses. And if you have a shareholders loan account, consider converting it to equity. And I generally say that to entrepreneurs that most of the time, I know I've reviewed so many of your financial statements. You guys have 100 Rand on your share capital. Please look at your financial statements. You shouldn't have 100 Rand. You should convert your loan so that it's a shareholder's contribution. Avoid having cash withdrawal at all costs on your business account. And please don't use the business account for Pick and Pay and Spar Tops unless you are actually in catering services. Ensure that there's one director dedicated on doing the funding process. So, and they have resolution that actually empowers them to run around, because you will need to do a lot of run around and cleaning up and preparing, and also just being on top of things so that you can respond to the funders promptly. Okay, I'm almost done, entrepreneurs. I know that we kind of, I feel like we're kind of running out of time, but we're almost done. So I mentioned earlier that you're gonna need to focus on the main areas in relation to identify the problems of your funding and the problems that And as you are getting feedback, fix the feedback that each fund is giving, because if it's not picked by another fund, it's probably going to be picked by somebody else again. So if they are identifying problems, start working on those problems and resolving them. Here are the best resources for funding. FinFund has over 15,000 funders, and you also have the government funding, which is basically going to be DFIs, but including each province, because there is also funding at the province level. And also there's ESD funding, that's the resource. There's a specific one also on the agriculture, which was prepared by Western Cape, but you can also fund funders that are actually funding at the national level.
To all our entrepreneurs, our SME owners, we truly appreciate the time it took to join the webinar. We know that it is not easy out there, and we trust that you will keep pushing and you keep knocking on those doors. And they say keep knocking and the door shall be open. I want to give you a quote by a lady called Jessica Heron. She says that you have to see failure as the beginning and the middle, but never entertain it as the end. It's not easy out there. Sometimes we fail, sometimes we fall, sometimes we rise, but we keep pushing. So we wish you all the very best.